we got the setup looking good, bro. We got the setup looking good, man. But I'm looking at NZDUSD right now. This is a trade that actually called out, when was it? Sometime last week on the pair, and this was before. Get a good look at that, and then this is after. Beautiful entry. So I actually didn't personally take this because we had super high impact news on the dollar last week, but overall it was a very nice trade setup. As you guys can see, it is 2:33 a.m. Monday, September 2nd. We got the Lambo, you already know. But that's pretty much it, man. Hope y'all enjoyed this video. Hope you guys are all doing good. I'm gonna cue the intro, and I'll see y'all in a second. What I have here is NZDUSD thrown up on the 15-minute time frame. What I want to do here is I just want to walk you guys through the entire process of why I was looking for potential sells near this area. So this is actually the trade right here on this pair. Before I really get into it, I just want to say that most trades, I would say like 90% of the trades I talk about on my channel and the video recaps that I make are trades that I've actually taken. However, this trade here, you know, just keep it 100% transparent. I did not take this trade. I was looking at it, and this was my analysis, but I didn't hop into it because we had some super high impact news actually occurred. Now, it turns out the news itself didn't really give us much of an impact, but it was projected to be high impact, which is kind of why I stayed out of the market. So the first thing I want to do is I want to take you out to the VIP alert room, right? So right here, September 2nd, 2020 at 3:26 a.m. I posted this idea on NZDUSD. So this is before, right? This is what I wanted to see happen. I wanted to see price pull back to this level and then push to the downside, right? And if we come right here, this was after. So that played out very beautifully, very clean setup. Aside from that, right here is the high impact news that we actually seen. We had some US data coming out, employment change, which was very high impact, and then we also had the Fed speech occur, which wasn't as high impact. But the thing about speeches is you could never really guess the impact of them. It all depends on how it goes as a whole. But yeah, man, let's go ahead and get into this. I don't want to waste too much time. We're here on a 15-minute time frame, and to really start this analysis off, let me just go ahead and rewind the charts a little bit, and you can see that we started this bullish rally here around 64.90. So I guess you could say somewhere around the 6,500 psychological zone. Price kind of pushed below it, and then we began to consolidate, pushed all the way up, and we began to trade up here at 6,788, and then we kind of topped out around this level. So to go ahead and take a closer look at this, you can see that this was acting as a form of support right here. We did see price begin to reject, and we've seen that buyers were still in the markets for some time. So in my previous videos, I have talked a good bit about liquidity and the factor of what drives the markets, right? What causes the markets to go in a particular direction. So we do know that us retail traders, we provide liquidity for the higher power. So a lot of these moves on a lower time frame come based off of the overall sentiment of what us retail traders are thinking, right? Because us retail traders, maybe not all of us, but a high percentage of us, we trade the same. They trade break and retest, we trade trend lines. So there's so much liquidity around these zones, and I'm gonna kind of walk you guys through the concept of how you could have took advantage of this opportunity if you would have thought that there was a lot of buyers into this market. So we can see the market's very overextended. You know, if we were to go ahead and come back here, price really didn't pull back since this level. You can see how we had a major spike to the upside, then we pushed all the way to the downside. Something I want you guys to start thinking about. We always think about fundamentals and technicals, but try to think about where most stops are, right? So if we see right here, price pulled back around this level, and then since this pullback, it kind of rallied about 130 pips, and then we just consolidated and still began to make these higher lows and higher highs right here. So one thing we could do is we could even draw this just as visual representation, and you can see that there was a bit of buyer control, right? Very simple. Something like this going on. Now, me personally, I wasn't really looking to trade in that. Reason being is because I've seen a very common move actually take place. I believe I did talk about this in one of the videos I posted a few days ago. But if we mark this out here, this is what we call contraction, right? It's called consolidation, contraction, whatever way you want to view it, but it basically means that the market has no particular direction in which it wants to move. It's consolidating. You have people who are looking to buy and sell. However, what this is doing is it is accumulating orders. So if we look at where the market is when this contraction is occurring, the contraction is occurring. You can see how we made this level. Now we're making a new level. The contraction is occurring near a previous resistance in which people are looking at to turn into support. So if we were, just as an example, to come over here and rewind the charts, what do you think most people are doing? You know, if you had to be active in the market, what do you think most people are doing? Most people are probably going long because they see that price is overall in an uptrend and it's in a simple break and retest situation. So just by looking at this and looking at the markets from a logical standpoint, we know that there is going to be liquidity below here. Now, one quick reminder is just because there's a lot of liquidity below a level, it doesn't mean price is going to push below it, right? This could have very well pushed the upside first, but I'm gonna explain more about that in a second to you guys. You know, there could have been a lot of stop losses here, and price could have very well followed through with it. You know, it's just all circumstances and all based off of, you know, what type of market cycle you're in. So this was our contraction. Then what do we see happen? Boom, push to the downside, and then boom, push to the upside. So you can see that we had this level here, grab the liquidity. We're hitting sell stops. Remember, there are people who are looking to catch a breakout. They're looking to catch something like this, right? And then you also have people who are looking to go long with something like this. So you can see both of those players in the markets were taken out, as well as anyone who were looking for a break and retest. So people who were looking to see it push back down to these lows, as well as people who are looking to see a push to the upside. So we have our contraction, which is one phase. Then we have our expansion, which is basically price, you know, taking those orders out, potentially gathering new potential orders, bringing more liquidity into the markets. And then once those two phases of manipulation happen, you'll usually see a follow through. So the direction of your follow through is really going to depend on a few different things, right? Our overall trend is up. So if the actual supply and demand of this currency is to continue to raise in value, you'll see some manipulation happen, then you'll see a continuation. However, if you have a bias that a certain thing is going to happen, you can trade it accordingly. So for me, I had a bias that the US dollar was going to get strong. Okay, I had a bias that the currency itself was going to strengthen, and obviously if the US dollar is stronger than the New Zealand dollar, that's going to cause this pair to push to the downside. Remember that you have your base currency, which is the New Zealand dollar, which means if New Zealand dollar is stronger than the US dollar, price is going to push. If it's weaker, it's going to go down. I projected that NZD, which was the base currency, is going to be weaker than the USD. So what we have happen here is we have our contraction, our expansion, and next I want to go ahead and draw this up here because this is another concept I kind of want to dive into. So we see price push up and makes this level, right? And then we see the pullback. I'm talking about this move right here. It pushes up, it pulls back, and we see another push to the upside. So around this level, we may have potential sellers who are actually looking to get into the market. So what we see here is we see price actually make a new high, right? It makes that new high and then it engulfs it with a bearish move. And I'll go ahead and change the color of this for you guys. Let's go ahead and make this green, which shows bullish pressure, and then let's go ahead and make this red, which shows bearish pressure. So we had something like this going on, and usually what I like to see happen around a double top is I like to see a bullish candle and a bearish candle. Basically what this bullish candle is doing is it is stopping out anyone who, you know, basically is looking to sell around a double top. Okay, that's basically what we see happening. Same thing, this move right here could have been stopping out anyone who was selling there at that previous level. So once that bearish candle does come down, usually what I like to see is another bullish candle come back up into that previous bullish candle, right? I want to see it come back up into there and then basically see price push back to the downside. So this is basically the cycle that happened here. You won't be able to see it. I probably have to go up to the higher time frame to really explain it all. But basically we had volume come in around this area and pretty much induce longs into the markets. They then stuck sells into the markets, and then they pushed price back up to break even and liquidize these positions, right? Because large money put money here to stop retail traders out. See what I'm saying? They put the money in, they stop the retail traders out, then they put money in to push price back to the downside. So they pretty much shorted this, right? They shorted, they put in enough money to change the candlestick, and then they put more money in here to stop out at break even. See what I mean? And then this push to the downside closed them out here, and they were looking to grab the rest of that movement by pushing price to the downside. So I know that might be a little bit confusing. Like I said, when I'm on the YouTube channel, I really don't have time to fully, get through everything as a whole and how all the concepts work. But basically, that's what we see happen. We see the contraction, we see the expansion, see the bullish candle, bearish candle coming down. Now we're looking for another push to the upside. So basically, something I like to see happen when this occurs is I like to see price take out some type of low. So you see how we had these two lows here. Being that price spiked below this low, we're now going to be inducing selling. So the thing about this is if price pushes back up, it's going to be above these highs, and this will probably be an opportunity to enter for a sell with the least amount of drawdown, because most people that entering and the market's already going where it needs to go. When if you enter up here, maybe it's a little more risky. You don't know if price is going to continue to the upside, but that does allow you to kind of get less risk. You're putting less risk into the markets for a better reward. So basically we see that happen. We see price push back to the upside. You can see we hit the price, and if we go right here, I used Fibonacci for this one. I took fibs from here all the way down to here, and you can see that was our entry, right? And then if we press play, very, very clean setup. Then one more thing that caught my attention is the 618 lined up perfectly with this previous support resistance zone. So that's kind of why I would have wanted to take it to that level. I probably wouldn't have looked to hold it any longer. If you were a swing trader, you probably could have went ahead and did that. But for me personally, I was just looking to exit around that 618, and that was about 53 pips or so. So if I come back to the alert room, right, and I come right here, you can see our entry was 6774. Right here, 6771. And you can see that we still approached it, but the reason it changed a little bit is because we made a new low. So from that point, we took our Fibonacci and brought it to the downside, which led us to another opportunity to go short. So very simple here, right? We see prices turning to the upside. We see it's turning to the upside. We make a new high, induce those orders. We go for the retest. We make a new high, and that new high causes bullish candle, bearish candle. This bullish money is coming back in to liquidate the previous position, and then they are reversing the markets to grab liquidity of anyone looking to go long. You see what I mean? So if we were to go ahead and take like a trend line, let's see. If we were to go ahead and take a trend line here, you can see even around an area like this, there's no doubt people are looking to go long here because of this previous level, when in reality it broke and retested it. So that's kind of what happened there. This could also be like some type of head and shoulders pattern as well if you were looking at it from that direction. But that's the thing, man, the market's perception. It's all about the way you view it. Everyone views it differently, and that's why retail trading exists. There's going to be people that lose sometimes, and there's going to be people that win sometimes. We know that there was liquidity up here. We know that the market reversed because everyone was going long. Large institutions found that opportunity to come in and push price up. So if we do work our way up to the weekly, now I know you guys probably wondering, I don't really hop on the weekly too often, but if I was to go ahead and erase all of this, you can go ahead and you can take Fibonacci up from this previous high, right? If we were to come over here, draw out this previous zone, it's pretty obvious that the 7557 was the high. If you wanted to click it from the top, which was your swing high, down to your swing low, just like this, high right here, low right here, where we wicked off and pushed back up, you can see that we were approaching the 618 level, right? So that's a very powerful zone. 618 is also a confluence of the fact that this is like a supply demand zone. So it's very crucial, man. That's why I really like using fibs. I feel like Fibonacci, it keeps things very systematic. It allows you to get in based off of these certain measurements rather than just from a point where you have your support resistance drawn, but it may be in a different spot than everybody else. You see, so if we go back to the 15-minute time frame, you can see that this was all occurring near that Fibonacci. So price kind of dipped above it, and then it faked out and it pushed back to the downside. So This is really for the people who keep getting stopped out. You know, one of the main things I recommend is understand liquidity and understand why these moves happen. Like I said earlier, man, retail traders provide liquidity for the large institution to come in and reverse the markets, right? In 2020, a lot of this is happening. I know there's a lot of conspiracies. People don't believe in institutional trading. Us as retail traders, we can't really trade like an institution, but it's a concept as a whole, understanding where liquidity is. If everybody, like if thousands of retail traders are all buying on the same support, a lot of time you'll see these fake outs occur. So yeah, man, that's pretty much it. Buy when everyone else is fearful. Stay out of when everyone else is greedy. Kind of understand when the best time to enter is, based off these methods that I'm teaching here. You know what I mean? So most of the time, something I realize is the best reaction to support resistance is before the support resistance is formed. Once it's formed and everyone catches on to it, you'll see a lot of manipulation in these markets. So that's pretty much it, man. Hope y'all did enjoy this video. It's been your boy BGFX. Hope y'all got some value from it. One more rundown of this, right? Contraction, expansion, make the high, pull back, make this level, make a new high, and then we are reversing. So that's pretty much it, man. Hope y'all enjoyed this video. Very simple concept. I'll catch y'all later.